Hey everyone, welcome to your Algo Lab. In today's session, you'll get a quick recap of this week's major economic releases and market movements, along with a look ahead at the key events coming up next week. Without further ado, let's get started. On Monday, Germany's IFO Business Confidence Index fell slightly less than economists had anticipated for August. The index dropped to 86.6 compared to an estimated 86.0, down from 87.0 in July, according to the IFO Institute. In the United States, new orders for durable goods jumped by 9.9% in July, surpassing the consensus estimate of 5.0%. This surge was primarily driven by defense aircraft orders. Excluding transportation equipment, durable goods orders actually decreased by 0.2%. Various factors, including uncertainty over economic growth, consumer demand, and the upcoming November election, are likely prompting firms to delay investments. On Tuesday, data from Germany revealed that investment and consumer spending dragged down the country's economy in the second quarter. The 0.1% decline in GDP was driven by a 2.2% drop in capital investment and a 0.2% decrease in private consumption, while government spending rose by 1%. In the United States, consumer confidence climbed to a 6-month high in August, as more positive perceptions of the economy and inflation outweighed declining optimism about the labour market. The Conference Board's index of sentiment increased to 103.3, up from a revised 101.9 in the previous month. On Thursday, Germany's annual inflation rate fell to 1.9% in August, down from 2.3% in July. In the United States, the second estimate of real GDP growth for the second quarter was revised up to 3.0%, 0.2 percentage points higher than the initial estimate. This increase is mainly due to a significant upward revision in consumer spending, although investment and several other key categories were revised downward. On Friday, France's headline inflation rate fell to 1.9% year-on-year in August, down from 2.3% in July. The decrease was largely driven by a drop in energy prices, partially offset by an increase in service prices. Germany's adjusted unemployment rate remained steady at 6% in August. Inflation in the euro area, measured by the headline HICP, declined to 2.2% year-over-year in August, from 2.6% in July. The core inflation rate eased slightly to 2.8% from 2.9% in the previous month, aligning with expectations. The decline was largely attributed to lower contributions from energy categories. In Canada, the annualized GDP growth rate rose to 2.1% in the second quarter, up from a revised 1.8% in the first quarter, exceeding consensus expectations. Government spending and investment contributed nearly 80% of the quarterly growth, while household spending on goods fell and services spending slowed significantly. In the United States, the annual rates of headline PCE and core inflation remained stable at 2.5% and 2.6%, respectively. The US August final Michigan Consumer Sentiment Index rose slightly to 67.9, up from the preliminary reading of 67.8. Stocks rose as the Federal Reserve's preferred measure of core inflation increased at a modest pace, supporting plans to cut interest rates in September. Next week's jobs report will be crucial in determining the scale of the potential reduction. European stocks reached a record high as cooling inflation data bolstered expectations for upcoming rate cuts. This favourable inflation news helps maintain the optimistic sentiment from last week's Jackson Hole meeting, where Fed Chair Jerome Powell and officials from the ECB and Bank of England strongly hinted at rate cuts. Treasury yields declined, with the 10-year yield trading above 3.90%. The dollar registered its worst monthly performance this year. Oil prices fell sharply following news that OPEC Plus will proceed with previously announced output hikes in the fourth quarter. Meanwhile, Bitcoin slipped, trading below $59,000. Looking ahead to next week, US financial markets will be closed on Monday in observance of the Labor Day holiday. On Tuesday, the ISM manufacturing PMI is expected to show a continued contraction in manufacturing activity for August, although the rate of decline in the headline PMI may have moderated. Wednesday brings the Bank of Canada's rate decision, with the Governing Council likely to cut rates by another 25 basis points, as key data since the July 24th meeting has been weaker than anticipated. On Thursday, the ISM services activity for August is expected to maintain a similar pace to June at 51.8. Consumers have continued to rely on savings to support their spending throughout the summer, driving the savings rate to its lowest level since 2008, outside of the pandemic period. Friday will see the release of the non-farm payroll number, with a consensus estimate of 163,000 jobs. This figure is well below the neutral pace needed to keep unemployment steady, suggesting that the unemployment rate may continue to rise through the rest of the year. Lastly, let's turn to the central bank watch. Here we review recent rate decisions and highlight what the market is currently predicting for future actions. It's important to note that economists' forecasted rate cuts may differ from those implied by the market. Market is expecting for the rest of the year a total of 4.0 cuts, or 1.00%, down from 4.1 cuts, or 1.03%, a week ago. On this channel, we share tested strategies for investing and trading, covering everything from technical analysis and fundamentals to economic trends and sentiment-based algorithms. If you don't want to miss out on any of our content, be sure to like, subscribe, and hit the bell icon to stay in the loop. Thanks for watching, and I'll see you in the next video.